Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading. Welcome to our trading room recording on Friday, the 23rd of July, 2021. Okay, guys, let's just start by looking at what happened yesterday. ECB interest rate decision and the press conference. They didn't say anything that the market wasn't expecting. They basically said, listen, we're going to continue to support the economy by printing money and keeping interest rates low. As you can see, they kept it at zero. So we got a little flash at one stage on the euro dollar, and then it retraced again, and that was it, guys. Now, we never know what's going to be said, and we never know how the market's going to react. And that's why we need to keep an eye on them, because it could have been the start of some move. But a bit of a damp squib, as I say. So nothing much happened there. Today, the only major news out is the market manufacturing PMI flash. Expected 62. We'll have to see how that comes in. It's not expecting any big thing there, guys. So that'll do for the economic calendar for the day. So far as markets are concerned, the Far East Asian markets seem to be in the red, but the European markets are all in the green. Not great moves, guys, but they're sitting in the green. And I expect the American markets will also open up in the green today. It was a little bit of an off day yesterday. The account was down a very small amount, guys. But it's gold, it's metals, it's all those safety things that I got into a few months ago that's pulling me down at the minute, because the Nasdaq's going up. So what do? Do you suddenly swing? No, I'll keep my insurance policy on. And we'll keep trading stocks in the meantime, but hold on to the safeties. And then if we do get a crash, at least we've got something that will give us a little bit of insurance policy against that, guys. So it's watch this space. Let's see what happens as the year develops, and let's see how we go about tackling it and trying to get the best out of the situation. Okay, so just one thing about the website before we move on. I'm moving off this website, so don't be trying to subscribe on it, guys. We've been running it for a few years, but what I'm finding is that it's much simpler just to go on to something like Patreon or whatever, guys, because they manage everything. And as a one-man show, which is what I am, for me to run a website, to update it, to stop all the scammers that come along, and not that they do anything other than continually set up accounts which go nowhere because they don't pay to get in, and then you've got to go through and take them off. You've got to update all of your plugins all of the time. So, and then obviously add content to it daily. Whereas the way I'm doing it now, it's kind of all done. You click a few buttons and it automatically uploads to YouTube. You've got it in Vimeo, which is where I do the recordings, and then I'll do the same thing on the Patreon. It'll just happen automatically, guys. And somewhere down the line, on Patreon, we'll just put a little paywall in there. Not too much. Don't want to put anyone off. But in the meantime, between now and then, everything's going to be free, guys. Which brings me to the reason why we've come on to this. This is the recordings I've done in what we call the Competent Trader, which was our training program. Why wasn't a more exciting name? Well, just being competent is all you need to be, guys. Be competent at trading, stay in the game, don't blow your account, and then you'll get lucky. You'll be in something that suddenly takes off. You'll be in, whether it's gold or whether it's Bitcoin or whether it's a particular stock. And when it takes off, you're there and you're in the game, guys. So you need to be competent. That's why I just call it not super duper trader, make a million trader, or whatever other names are out there, guys. Of course, I'm jesting. So it's competent trader. And what we've done with this is there's everything about personal trading strategy. I will release these free on YouTube, and then I'm going to rewrite the program, because this was the first draft. This was the first time we did it, guys. And I've been running with this for a few years now, and I've got other ideas about how to do the training program. So I'll write a new program, and that'll be the one that will go on Patreon behind some sort of paywall, guys. Not too much, you know. This one I'll put out free, but as I write the new program, you know, I don't know that each individual recording will be exactly the same label or whatever. But as I do it, I'll take these off YouTube, because obviously I don't want to be giving away for free forever. But certainly over the next 6 months or so, this will be put out on YouTube for free, and then we will gradually, 6 months after that, gradually take them off as I rewrite them. Complex corrections. There's 2 recordings on complex corrections. I haven't watched these guys for a long time, because I don't need to watch them. So I'll watch them, and then, provided I'm happy enough with them, I'll upload them to YouTube. The reason I'm talking about these 2 is because of the question we had the other day about channels, and I think these are the 2 that will answer the question to the best of what I have pre-recorded. And then we'll just start doing the rest. We'll do the analysis first, guys. Analysis starts there. The reason analysis starts there, not up there, was because I wanted people not to lose their money before they learned how to analyze, because I do the analysis, guys. Okay, so I'm going to put that up on YouTube. Okay, so let's get over to here. Now, before we start our analysis of the charts that we do on a daily basis, I just wanted to look at Twitter. This was yesterday's close price. This is today's opening price. So this is pre-market, determined by futures market. Twitter released some earnings for the last quarter, and the markets liked those because they've actually beat their forecast. So it's going to open up higher today, guys. I wouldn't suggest you try and buy it today, because you're paying for the beat, as it were. You're paying for the increase in earnings. And then Snap as well released earnings today, and you can see where they're going to open up at their previous high. Yet again, not a place that I would get involved in anything. I suppose back here somewhere would have been the place, maybe there. And then another one that released earnings today was Intel. I think this is Intel, isn't it? Intel Corporation, which is one that I'm actually invested in. The blue ones here are the ones I'm in. The purple are the ones I've been in and have sold. And Intel's numbers weren't as good as expected, so it's going to drop today. So I'm going to have to make a decision whether I just take a small loss in that and just get out of it. Because if they lost this quarter, what's the chance they're going to make it a profit next quarter with all the competition that's going on out there? And one of the areas that they do really well in is producing equipment or chips, as it were, for the likes of Microsoft and what have you. But they're busy trying to make their own, guys. So that income stream will slowly but surely dry up for Intel. So not so sure about them anymore. The reason I got involved, I only got involved a few weeks ago, guys. They dropped down here, and it started the way back up again. I'm not entirely sure where I got in, but I got in here somewhere expecting this to start to go up. but it's more likely in my mind that this will do something like that and maybe even start to drop off. And I just don't want to be in that, guys. And what happens if I close it for a small loss and it does that? Well, you don't worry about that, guys. Once you close something, you've closed it. If you want to come back and look at it later to see if you can get back into it, fair enough. But it doesn't matter. Another one I closed yesterday was Fiverr. I only bought in last week sometime down here somewhere. And we got that. Got about 6% out of it. I thought, well, that'll do me. That'll do me. If it drops again, I'll buy it again. That's just a quick overview of what I do for most of the day, guys. Most of the day I'm not looking at currencies. Most of the day I'm looking at share prices. But we do the currencies as a setup for the day, what's happening in the markets, what's happening in the currencies. Is there anything there that I can see that's blatantly obvious, a good trade? And if there isn't, I don't worry about it and move on. And then I do the same process going through lots of stocks. And then, as I have mentioned on Flipboard, I read through this, every day. Anytime I have 10 minutes to spare, I'll go on the Flipboard, read through all the different articles, and the ones I find interesting, I flip them into Logic FX Trading. And then that's my start point for, this was interesting, this guy, Chris Esty. 2 stocks I'm never selling. We talked about that one yesterday. 3 stocks could double your money sooner than you might think. Now, remember, all of these headlines are to get you to read the article, guys. It doesn't necessarily mean they're true. But with Motley Fool, often they give you a nice little bit of information to start with. So they're talking about ESTY, guys. Something they've been buying and selling and buying and selling. Buying and then closing, should I say, not selling, not NVIDIA. So this would be my start point. I talked about this the other day, but this is what I do during the day. Besides watching Bloomberg and one thing and another, this is part of what I do. So you go to ESTY, come over here, and it will be in here somewhere because we have invested in it before. ESTY. That would have been a good place to get involved in it, and maybe hang on. I wouldn't get involved in it there, guys. Maybe it comes a little bit up. Maybe you get a drop like that, then in there, maybe have another go at it. And then obviously within eToro, you can go over and see what they think about it. Oh, ETSY, I always do. ESTY. Come on, Steve. Research. They're saying it's a strong buy, but there are a few people saying sell, a few people saying hold. Their target is 221, so their lowest is 135. It's at 201, so it's not necessarily something that I would be overly excited about getting back into again, guys. It's getting up there, as it were. Does that mean that it will just get to there and then stop? No, it could certainly hit 270. But I prefer to buy things that have dropped. Remember, the charts are, I don't know who came up with the saying, the charts in the short term are a voting machine, and the long term, they're a weighing machine. So when people vote, it's to do with how they feel at the time about something. So the little bit of news can come out, maybe the need to sell, maybe the profit take, and stock price drops. That's the time that we need to think about buying into it. But we need to know the reason why it's dropped. And of course, then we would take that information and go over to either to Yahoo Finance, which gives you a load of information, or into Everyday Money. These guys have got this little calculator set up, guys. But yet again, all the information's out there. You don't have to subscribe to this. ETSY, isn't it? Yeah, ST. See what they think about it. We'll just go on to straight over to 8 pillars. Don't like the PE ratio. It's 53. They're looking for anything under 20. So I agree with them. Shares outstanding? No, because what they're doing is they're continuing to issue shares, which they don't like. And then the price to free cash flow, they don't like either. That doesn't mean that you shouldn't buy it. It's just part of the process, guys, of finding out for yourself whether for you it's worth taking the risk to buy it or not. Now, at the moment, and what I've saw just within these 2 minutes, I'm not overly keen on it, but I would be interested to see. I understand why that is, because people see it as growth stock, but that basically means it's overvalued, guys. So if you went back to the chart and said to yourself, well, if for some reason there was a big drawdown on it, if the whole market dropped, and you end up, around 20 PE, well, then certainly with potential growth on it, it would certainly be worth buying at that. But is it worth buying there? Possibly not. Okay. So then you say to yourself, well, if I wait for that to happen, I could be waiting forever and I'll miss all of that. Well, yes, but what you got to be doing is looking for the shares that have done something like that for whatever reason, whether because the whole market's dropped or because they're out of favor or because the market's looking somewhere else or because of an Archegos where they, where everything had to be dumped all at once and the prices come down. Guys, if you're going out to, let's say you're going to buy houses to fix up or to rent or whatever, you don't go out and buy the house at the normal value because there's no profit in it. The profit's always made, not when you sell it, when you buy it. That's when the profit's made, guys. So if you go out looking for a house to renovate or a house to, fix make into apartments or whatever, you've got to go and you've got to search and you've got to work very hard. And you don't take the first house that comes along, and you certainly don't pay the price that's asked for it. Because there will be one out there, there will be a seller out there that is desperate for the money for whatever reason, and they'll take your offer. But you got to work at it. You got to work hard at it. And that's where the people who, unless the market's all going up, guys, if the market's all going up, then everybody makes money, but the market isn't always going up. So you need to look for the property that for whatever reason is you can get it less than what it's worth. And first of all, you need to know what it's worth, and then you got to work to find the property that's that you can get for less. And it's the same with this. If you can buy things at the right price, first of all, know what the real value is, and then have the tenacity to wait to get it to the right price, at the right price. That's when you'll make good money at trading, guys. Most of the time it isn't around, most of the time it isn't happening, but that's part of the process of always looking for the right price. Now, given where everything is at the moment, given that we've all gone through this, are these prices going to stay? No, they're not, guys. At some point, these prices will drop. They could push on up there first before they drop, but at some point they will drop. And that's the point whenever we need to have cash to start buying them, guys. How long is that going to take? I have no idea, guys, but it is coming. And I'm not talking specifically about ESTY. I'm talking about them all. Okay, let's move on and get over to here. Okay, so what's happened yesterday? NASDAQ moved up. Broke through our alarm again. It seems to be doing what we said it would do way back. Remember, it was earlier last month, May actually, when I copied this and pasted it here and I said that's what the market's going to do. That's exactly what it's done, to the extent that it even gave us that little scare there, and then it pushed on up. And during the week, do you remember, said, guys, the big drop's not going to come this time round. It's going to continue on up. So far we're on, just broke that top by a few pips. If we have a good day today, you can see it moving at the minute, guys. It's going to continue on up. Might be a little bit eerie or hairy on Monday or Tuesday, because if it gets up into there, market might go, oh, it's overvalued, and we might start to get our drawdown, just as we did back over here or here. We could well, because it's in a channel, guys, we could well get a correction back to the bottom of the channel, which would be a nightmare. But at the end of the day, it is what it is, folks. It doesn't have to happen. It could get up there and just, run flat or something like that. It could get over to there by running flat for a lot of months. But I do think there's a correction coming, guys. There's a lot of fear in the market at the minute. Dow Jones, still in that little flat there. We had the drop, we had the push, we haven't had the breakout yet. S&P, we had the drop, we've had the push back up, we haven't had the breakout yet. And as you can see there, I'm still got in mind that at some point we're going to get a big correction. A correction, guys, not a crash. Nikkei, which, just to let you know, which is the reason why I'm trading the way I'm trading at the minute, which is to take small profits. Now, whether it's the right thing to do or not, I don't know, guys. None of us ever know until things have passed by. Other people are just 100% invested, and they're just riding the lift up, as it were. The difficulty comes then for them is if we do get a sudden crash and they hang on in there and don't do anything about it, does their whole account then drop by 10, 15%, and then they have to slowly claw it back again? I don't know, guys. But what I'm doing is I'm just taking 5%. That's what I've been taking all year. And you can see, I obviously recently I dumped the dollar yesterday because of the way the market reacted to the ECB. I kind of thought, there's more chance now of the dollar going long than short. I don't particularly want to trade it short, but structurally it looks like it wants to drop. So I just thought, you know what? I'm going to get out of this. So I just got out of it. That's okay, guys. 6% and 5%. It's not the end of the world. That was the Aussie one that thumped me. Well, we've talked enough about that over the last week or so. But if you go back then and look, 5%, 5%, 6%, a couple that have dumped for, dollar again, guys. I dumped the dollar at one point. PayPal, I'd waited a long time for that to come back, guys, 5 months. When it got back to break even, I just got rid of it. A couple of pound trades, NIO. When you get a whole host like that have all been dumped and they're below 5%, it's because I'm taking, those are two currencies there. It's because I'm getting some money off the table because I'm feeling a bit uncomfortable. But ordinarily, 5%, 5%, 5%, 8%, 8%, 6%. Need to move this out of the way. Make this 3 months. That'll be better. And then show more. Okay, better. 5, 8, 8, 6, 6, almost 6. 5, 6, 5, 5, 5, 5, 5. You see 5s all the way down, a few 7s, a 13 there. What was that on? Plug. Yeah, it took off. 2 days, guys, I made 13%. You'll not do that all the time, but you can see why I close it. Well, it goes up that far in 2 days. It's obviously going to correct back down again. 7, 7, 5. So that's because the reason I'm trading like that, guys, is because I'm expecting a correction. So I'm taking my profits. Now, if you go and look at a lot of those and do a lot of back testing on them, you can see then whether it's been the right thing to do or the wrong thing to do. And that's something, we'll do a video on that. We'll go through a lot of them and say, well, taking that profit then, was that the right thing to do? Was it the wrong thing to do? And in most cases, when I have gone back and checked a month or so later, it's been completely the right thing to do. And of course, you can do this as well. Because remember, we're not just, most of these things, you're not just trading them once. There's Corsair Gaming, 9 trades, 100%, averaging 8.57%. Now, I'm heavily invested in Corsair at the moment, guys. I truly believe that it's going to go up again and will do well. Cardno, I took 4 trades in Cardno, guys, and then decided to get rid of it. But yet again, 75%, 6.8. What else have we traded more than once? There's Snap, but it took me 6%. Alibaba took me 6%. Fiverr, that was last week, guys. Only took 1 trade on it. 19th to 7th to 23 days, we got 6%. Plug, 90% correct, 11 trades, the average 5.74%. Kinross, 100%, 5.71%. That's another one that's drawn me down at the minute, guys, but I'm not concerned because I do think the gold price at some point will go up and then they will do as nicely. Overstock, 100%, 5%. Nvidia, only took it once. eBay took it twice, 100%. So, by taking the small amounts, guys, they slowly but surely build up. That's the policy I'm using at the moment, or the strategy, should I say. The strategy will change as the market changes. The strategy will change. Okay, let's get on with it. Right, UK, drawdown and push up. French, drawdown and push up. Let's get in a little bit closer so we can see behind all the scribbles. Oh, I've got visitors. My little niece and nephew. So I might get interrupted here. They're 8 and 4 or something like that. Love them to bits. Cheer up, kids. Kids are great. Okay, German drop. Still pushing on up. Okay. So we're still looking for this to break out, which it will do eventually. Aussie, ooh, possibly going to break out, guys. I don't trade any Australian indexes, or sorry, Australian stocks, so it's not that important, but it just shows you what's going on in the whole world market. A little bit of recovery there on Wednesday, wasn't it? And then yesterday, 23rd, 22nd. Yeah, this is closed at the moment, guys. So there was a little drawdown yesterday. DXY. Now, we'll zoom into this. We'll get this on the 1 hour. There was what happened when the ECB made their announcement. Initially, it dropped. And then as the statement was read out, or the press conference, then we saw this starting to push back up. And this is where I decided to get out of it, guys, because I thought to myself, do you know what? Now, listen, I still think it will correct down, but I didn't want to it pushing way up here, guys, before it comes down. I think eventually it'll drop, but I'm out for the moment. But I'll keep an eye on it, and obviously, if I decide that it's right to trade it down, I'll let you guys know. And the euro dollar will be the same. We initially had the little spike up, which I thought was going to be the start of this move. and it's come back down again. So we're going to have to give it a bit more time. It's entirely possible that it's going to continue to drop, but you can see that, guys. You know, is that an ending diagonal or is that a running flat? That's the big question. And when we go back over to here, the 4 hours, it just looks like a running, or sorry, an ending diagonal to me. I don't know if you guys can see that or not. Let me move it out of the way. It just looks like an ending diagonal to me, which, you know, which always end up breaking out long. But we're going to have to bide our time for that, guys. The pound against the dollar is a little bit of a drawdown on it today, but let's see if it gives us a setup. Remember, once I'm looking for the dollar to drop, guys. If the dollar goes long, then I'm not trading, and it's just what I've decided. You pick a trade that you want to try and take, and if it comes off, you trade it, or at least make a decision whether you're thinking about trading it. And if it doesn't come off, then you leave it alone. So for this time round, I'm going to try and trade the dollar short. So we'll have to see, does it give us a little setup here? And then maybe during the week next week, or maybe towards the end of the next week, you start to get a breakout. And we start to get that, then maybe I take that long. And the Aussie as well, guys. I want to trade it up there, but I don't know that this is the time to do it. I thought yesterday might give us a, you know, the telltale, as it were, to say, hey, money's going to move into Europe, and the dollar's going to falter, but not yet. And this is the same, and this has started, it's moved down, but it stalled again. It stalled above that. Well, it's an alarm line, but you could use it as a trend line. Stalled above it, so there could be more upside to it, guys. Let's look at the oil price in a moment. This is also stalled. I was expecting this to go. The yen pushing up in the opposite direction, but that's because the markets are growing again, guys. So that's one I would stay away from. And this as well, that's why I closed it, but it had come down, it started to go back up, and I thought, well, I don't want to go back up into there somewhere, so I just got out of it. China's running flat. Gold possibly setting up to break out, but guys, there is that possibility that it drops there as well. So I'm going to hold off on buying PHSY. I do want to buy PHSY as a hedge, a better hedge than gold miners. But just in case we get the other side of that, with this being some sort of ABC, little expanded flat, and this being the start of the next move down, just in case we get that, I'm going to hold out before buying physical gold there. But there is always the possibility from a technical point of view that that could break. But at the moment, I don't, with the market still going up, I don't see the big rationale at the moment for gold to break out. So I'm just going to have to hold on to what I've got and see where we get with it. Silver, remember, it's a long-term game with these guys. It's not every single day you're going to get a trade, and it's not every single day you're going to make a profit. Silver, same thing. I think it's going to go long, but I do think there may be a little bit more downside to it first. And then when it does, if it gets down to a level where I'm kind of happy with it, either there or further down, I might buy some there and there again. If it got down into there, maybe down into there. I'll buy PSLV because it's physical. Bitcoin, we've had a little push up on it. I wouldn't bet that it, well, I suppose I have because I bought into it down there. I'm sitting nicely in the green at the moment. I'm dying for it to break out and start some sort of recovery, guys, so I'm getting my stop loss to zero. and then forget about it. But it's entirely possible. It's in this structure. It's entirely possible that it drops again within this. And if it comes down there, I'll buy a little bit more. I'm not going to go mad with it, guys. But I do think in the long term that there will be a move up. I'm not saying in September. I'm just saying at some point in the future, I do believe that Bitcoin will take off. There's a lot of talk about Ethereum as well, guys. I'm not any expert on cryptos. The only reason I'm even talking about them or dealing with them is because they've become more mainstream over the last 6 months or so. And I always said way back over the last lot of years that I wouldn't trade them until they became mainstream. Well, they seem to be coming mainstream. That's the only reason why I'm talking about them. Oil, nice little recovery in oil. That's probably what gave us our little recovery on the CAD against the dollar. Let's just clean it up a little bit. Now, what we've got to see now, I don't see it going up here anytime soon. Does that mean it can't do it? No, it doesn't mean that at all. But just with the OPEC's decision the other day to increase output is the reason that we got this drop in the first place. Yes, it's recovered a little bit, but I can see it bouncing or oops, didn't mean to do that. I can see it bouncing around in here for a while, guys. So I don't trade oil anyway. I used to try and trade it, but it was expensive and I got it wrong as often as I got it right. So I gave up on it. The other thing, so what I use it for is just a little bit of an indicator of either the Norwegian krona, which I don't trade anymore because yet again it's expensive to trade, or for the CAD, guys. Now obviously the dollar gets a boost on it as well, but there's more to the US economy than just commodities. Australia and Canada are very commodity driven, guys. EuroCAD, well, there's that move down we were talking about. Yesterday we kind of said, well, you can see a little spike up there. That was probably yesterday. Let's get down to the 1 hour time scale. That's what time of 22nd. That was yesterday, 1 o'clock. Now, if we go over to our economic calendar for yesterday, 12:45, 1:30. So at 12:45, the information came out. And where are we? Here. That was 12 o'clock up to 1 o'clock. So that was the anticipation of the information. That was the information. And then as the speech started, the press conference started at 1:30. That was 1 o'clock, right down to 4 o'clock. Hold on, I thought this is only 1 hour. Oh, sorry, that was 2 o'clock. So as the press conference started, it started to come off. And now it's not sure what it's doing. So that was the whole excitement yesterday. But guys, you got to keep an eye on them because sometimes they take off on the press conference or sometimes they drop like a stone or on the interest rate release. So we didn't get anything out of it, but there you go. Euro probably more downside to it. I don't want to trade it. I don't want to trade any of these guys. I've kind of fallen out of love with currencies at the moment. Over the last lot of years, I've enjoyed trading them, but this last lot of months, where we're getting to that stage of, everybody's printing money, everybody's interest rate is near enough zero, if not already zero. And we need somebody to start to move, and that will give us something to trade. In other words, if the Fed turns around and says, hey, we're going to start tapering, well, then we'll go, hey, right, let's start trading the dollar. And then you've got a whole host of things you can trade, and you could also trade all of the euro short then. Or if the euro had to come out, Eurozone had come out, folks, and said, yeah, we're going to start tapering because we think that the economy is getting too hot or inflation's kicking in, then we could have traded the euro long and the dollar short. But while we're in this dead zone, as it were. I'm just being super cautious, guys, because it's hard to get it right at this point in time. Euro yen looks like it wants to break long, but is it going to? Euro Swiss, it's just dead at the minute. Euro CAD, pound CAD, little bit of a push up. Nothing there. I want pound Aussie. I'd prefer to see that drop. I don't want to trade it short, but if it came short, I would try and trade it long. Pound New Zealand, it's working its way down. You could get into it now long, guys, but you maybe have to wait a lot of weeks before you actually get the breakout, so I couldn't be annoyed with that at the minute. Pound Swiss, little bit of a reaction there against the Swiss. Maybe because gold price is dropping, maybe because it's a little bit of risk on. So, what we've got to remember about the pound is, the Delta variant at the moment is running rampant in the UK, and the government has no intentions of doing anything to stop it, other than encourage everyone to get vaccinated. But, that's not the whole of the UK, but the UK generally. England's basically makes up 80% of the UK, guys, and England has lifted all of its restrictions. So that's the big thing to keep an eye on, because Delta variant is running rampant in the US at the minute as well, and probably a lot of other places, guys. But I'm talking about the places where we're trying to trade. If it's running rampant in India or somewhere like that, which it possibly is, or South Africa, I'm not trying to trade those, so that's why I'm not talking about it, guys. It's, we talk about the things we're trying to trade. Pound yen, well, yet again, the nice little move up in the pound against the yen. But because it's moved, if you look at it, the pound's moving flat to short against the Aussie. It's moving short against the New Zealand, but it's moved long against the Swiss. So it tells you that those movements are not necessarily to do with the pound and more to do with the other side of the equation. So in other words, the Swiss has moved short, the yen's moved short, and therefore the pound moved long against them. That's the picture I have in my head, but we'll look for more evidence. For example, let's go and look at the Swiss index. Well, it's running flat at the minute, guys. What was that I copied there? I haven't looked at this in a long, long time, guys. Possibly back here sometime, April or something, where I said it'll go up and then it'll drop. And then is this kind of copying that and saying eventually that'll break out and go long? I can't remember. Okay, let's look at the yen. Well, the yen's been dropping from here. I was hoping this was going to be the start of a move up. And if the stock markets start to crash, then you will get that move up. But at the moment, it's dropping, but not necessarily significantly enough to say you'd want to trade it. So let's go and look and see. Euro yen. Well, the euro moved up a little bit against it. This is where you look for something that's moving strong and say, hey, well, the Swiss and the yen are coming off, the little bit of tightening that happened. So let's trade against them. But you need one currency that you're going, well, that currency is moving well, so let's trade them against that. And then it's almost a no-lose situation, guys. But we just don't have that at the moment. There's no currency at the moment that you could turn around and say, well, that's definitely happening. Let's go back and look at the dollar yen. Even that, dollar Swiss kind of move. See, my problem with the dollar is that structure makes me think it wants to drop. So I'm not keen on trading the dollar long. Listen, the dollar could well continue to push up, guys, but that structure's just all wrong for me to believe in that. And this is where Elliott, or structural analysis, whatever way you want to call this, is a little bit of both that I do. It gives you as much information as to when to trade something as it does to not trade it. So you've got to use it both ways, guys. There's times when you think you want to trade something, but the structure looks all wrong, so you leave it alone. And there's there's also times when it sets up nicely, and you go, "Hey, I tell you what, this looks beautiful," as I thought it looked last week. Now, guys, this may still happen. Just as when I was talking about this last month, when it was at April, May, when I was talking about this, I said, guys, it was the same process we're going through. I said, this is an ending diagonal. It's going to go long. But look at how it did it. And it gave up in there. A couple of wee tiny losses, a couple of wee tiny gains. And I gave up on it. And eventually it came, guys. Eventually it came. And now we're doing the same thing in the opposite. You could probably take that. Although it does look a little bit more like a running flat. If it turns out to be a running flat, then... But it's that, guys. You see that divergence from there down? That's what told me that was an ending diagonal. You see, I could move that over to there, and then it looked like a running flat. But as it turned out, it wasn't. So it depends on where you actually put your lines. So is that the top there then? Take this to 4 hours. You've still got that divergence. Look at that, guys. That last move up there, which you can see is above there and above there and above there, but it's below, well, certainly below that one. It's below that one, but okay, it was there anyway. But it's not, it's not spiking higher. So it still makes me believe that it's going to drop, guys. Okay, watch this space. We'll maybe we'll get a trade out of it. Maybe we won't. So, euro, pound, a little bit of a pullback today, but we had a nice move up. I tend not to trade this pair. I know there was a nice move up on it there, but an awful lot of the time it moves like that, guys. And it's horrible trying to trade anything like that. Pound yen. Maybe it's going to break out long, but down there would have been the place to be brave with it. Aussie yen. Currently in a bit of a lockdown, certain areas. I'm not so I don't know enough about Australia to know whether that's going to hurt their productivity. I doubt that the mining areas will be locked down, although I don't know that. And the farming areas, it's probably the cities that are locked down. Potentially there's a trade there. I'll let you know. If I take any of these, I'll let you know, guys. Aussie New Zealand. I don't know about that anymore, guys. That's the worst trade I've had in months. Possibly the worst trade I've had all year. Sometimes you get these and you get that in a day or two and you go, wow, just made 10, 15% in a couple of days, and other times it hits you the other way, guys. So you take the rough with the smooth. You're not going to get them all right. Aussie Swiss, yet again, potential for more upside to that. I might actually have a look at the Aussie. And if I do anything with it, I'll let you know on Monday, guys. Aussie CHF and Aussie JPY. Maybe I might take them. Aussie CAD. Little bit of a recovery there. But with that oil price recovery, I wouldn't like to trade against the CAD. I don't know what these two are doing, guys. They're running flat at the minute. I trade them all through here. See that little arrow there? I traded them all through here, but didn't really get anywhere with them. I was looking for the yen to strengthen up and pull this down, but eventually it broke out. And yet again, do you know, I was talking about situations where the charts will either indicate to you a good time to buy or good time not to buy, or good time to sell, good time not to sell. Well, when this broke out, 90% of people on eToro who were trading Swiss yen were trading it short. I was trading it short through here, in and out and in and out and whatever. And when it started to break long there, I got out of it. I thought that's going the wrong direction. And when it broke out through there, I went, Now, I wasn't brave enough to trade it long, but I knew that trading it short was a bad plan. So, I mean, that's a long way. This is a 4-hour time scale, guys. That's a long way. We measure from there up 47 days, a month and a half, 2.3% or 274 pips. That's a long way to be wrong, to hope that something like that would happen. Now, anyone that rode through it would have got their money back. But for me, that breakout was the telltale. You're not going to try and short that from breaking out there, guys. The reason we had that line in was because there was a flat correction that had been running in on a daily time scale. You can see it there. That's why I was trying to trade it short. Because I said, well, it might break, and if we get it right, we could possibly have a really nice move back down to the bottom of this channel. But when it broke through, I had another look at it and I put this channel in, and I said, well, this is the new move. In other words, that flat correction's over. So in other words, the flat correction was over there. And this was a new move. And there's the channel for it, guys. So at this point in time, it looks like it could drop again, because you could end up with a zigzag, which would mean that you'd end up adjusting that a little bit. But I would suspect in the long term that this would have another one up on it. But that's a long way away. That's into the next 6 months, guys. So we're not suggesting you jump into it here and trade it up. Let's say if it drops, and if it drops to there and starts coming up, then maybe we get a trade there, something like that. We'll have to see. That's just thoughts, guys. We're not doing anything with it at the minute. CAD Swiss. Now, this is my favorite. I've got 100% record in this. Don't want to blow it now, but it certainly could be on its way back up there, particularly if those oil prices stay where they are and the NASDAQ continues to stay strong. In other words, there's no sell-off, because that was all a bit of move to safety, guys. And if we get the drop in gold for the same reason, then this could well push up. So it's another one I'll write down. I don't know I'm going to pull the trigger on it, guys. CAD yen, for the same reason, possibly could push up. New Zealand yen, possibly that could push up. So at least I'm getting a few possibilities here, guys. New Zealand CAD. Not so sure about that one. And New Zealand Swiss. Yeah. Yet again, this is one where it might have been a little bit braver the other day. The only thing is, I was just looking for a little bit more downside to this to try and equal that, but we didn't get it. I think that's it on its way. Certainly back up to the top of that channel, and could possibly be going to break out. Okay, that'll do for the day. That'll do for the week, guys. Remember, all we're doing here is we're having an overview that we do every morning. This is what I would do whether you guys were listening in or not, to give me an idea of what to look for and build up pictures where I go, no, 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 yeah, that may be that. And then sometimes you'll decide you to trade it and you'll get it right. And sometimes you go, no, or maybe you get distracted and you're off looking at stocks, or you're not looking at the screen at all. And you come back and you go, why did we not trade that? That was a good trade and we missed it. That's the reality of trading, guys. Now, if you want to sit in front of the screen for 12 hours a day and trade, then you'll probably catch more than you miss. But if you've got more to do with your life than do 12 hours a day and you only want to do 4 or 5, then you are going to miss things, guys. Okay, that'll do for today. Speak to you all again on Monday. I'll get some of the training videos uploaded to YouTube over the weekend. Okay, bye for now.